Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the U.S. tax implications for foreign real estate, international property reporting, how that works, what the pitfalls and the landmines are, and how you can avoid it. So general rule, right? U.S. taxes you on your worldwide income. Therefore, if you're a U.S. citizen, legal permanent resident, foreign national who meets a substantial presence test, U.S. is going to tax you on your worldwide income. It may involve foreign real estate income, foreign pension income, foreign earnings, consulting work, all that kind of good stuff, right? Just because they're taxing you doesn't mean there may not be a way to circumvent it. You may qualify for certain foreign tax credits. If you live overseas, you may qualify for the foreign earned income exclusion. But when it comes to foreign real estate, the key types of income tend to be capital gains, rental income, and investments, REITs, and things like that. Let's go through the basics. So when it comes to real estate income, here are three of the most common issues that most U.S. taxpayers who have foreign real estate have to worry about for U.S. tax and reporting purposes. One, sale of foreign property. Joe lives in the United States. He's got a foreign rental property in Taiwan. He purchased it for $200,000. Now it's worth $800,000. He has to pay tax on that income, just as if you sold the property here in Newport Beach, California, let's say, right? You have to pay tax on any income, and that would include the sale of a foreign property, even if you purchased that property before you came to the U.S. Common question we get. Second, income on rental earnings, okay? If a U.S. person has rental income coming from a foreign property, it's taxable in the United States, and it's generally reported on a Schedule E as in Everett. Now, in the U.S., they let you take certain deductions that you can't take in other countries, okay? For example, you can depreciate the property. Foreign residential rental is normally 30-year straight line is how you depreciate it. They changed it. 2018 used to be 40 years. Two common issues. One is even if you're below the threshold in the foreign country for having to report, you still have to include that income in the U.S. There's no baseline threshold for how much real estate rental income has to be reported. And the second very common issue, you get $20,000 worth of income from your foreign property, but you have $25,000 worth of expenses due to mortgage and things like that. Doesn't matter. You still report it, even though it nets a negative, you still report that on your U.S. tax return, okay? Schedule E, it'll show a negative, and in fact, depending on what your income level is, you may qualify for actively participating in a passive rental and things like that. It may actually be a benefit. Investment earnings is where it can get complicated. Things like REITs and REIT funds. You may be dancing around PFIC, passive foreign investment company issues in terms of distributions and things that are funds. Few common tips or important tips to keep in mind when you're doing it. Generally use spot rates for the acquisition and sale date. So you figure out the day you purchased it, you figure out the day you sold it, and then determine what the exchange rates are on those days in order to calculate the capital gain. It's a little different than when it's interest income or dividends. Depreciation may apply. I mentioned before, depreciation isn't common in lots of countries, and they do it differently in different countries. But if in the United States, you can normally depreciate the structure. It's normally 30 years. It could be used to reduce your current tax liability depending on the size and value of the property. Something to keep in mind is it's required to come back in down the line when you sell it. So at some point, the IRS is going to get their money. But, the general rule in taxes, you take the deductions now when you can. They could end up changing it like with SALT. They're talking about changing long-term or just capital gains in general under Biden, things to be concerned of. On the flip side, one thing to keep in mind, you may see the term FIRPTA around. If you are a foreign person with U.S. property, a little different, right? The converse of that. If you're a foreign person, with U.S. property, then when you sell that property, there are many hurdles that you have to overcome. FIRPTA is the main one. There may be a withholding of 10 to 15% depending on the year. Now, you may be able to apply for certificates under A288B in order to reduce the withholding depending on the value. One super important thing to keep in mind is the withholding is based on the sale price, not the capital gain. So for many people, depending on when you're listening to this video and what the market's like and when the shift comes in, you may not have any gain. So the idea of the IRS withholding 15% of your take is asinine, right? So something to keep in mind. If you're out of compliance for not reporting in prior years, you're worried about it, there's various amnesty programs. I finish off all my lectures with this spiel because it's super important. Doing one of these can get you into compliance and avoid harsh penalties that can come your way. And the IRS does penalize. I'm not a fearmonger. There are plenty of fearmongers and scaremongers out there, but the reality is offshore compliance penalties are a real thing. 3520, 5471, FBAR, FATCA, etc., etc. There's VDP, which is the Voluntary Disclosure Program for people who are either willful or cannot certify under penalty of perjury that they're non-willful. When you're non-willful, you got a smorgasbord full of different options available to you: streamlined domestic, streamlined foreign, depending on your country of residence, delinquency procedures, and reasonable cause. We have lots of free information available on our main websites and our sub-websites. Of course, you can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.